All right, welcome back to Squawk Box, everybody. Joining us right now is our special guest, David Rubenstein. He's co-founder and co-chairman of the Carlyle Group. He's also the owner of the Baltimore Orioles. And David, there are so many directions we could go with you. I was thinking about starting with inflation because we have consumer price index coming up in about an hour and a half. But you sat down and started talking about some numbers that you looked back. We're celebrating our 30th anniversary, and you looked back 30 years ago. What struck you when you were going through those numbers?
30 years ago is a long time, but when I look back at it, the Dow started the year under 4,000 30 years ago.
Yeah.
And the big news was, I think in February of that year, the Dow hit 4,000, which was seen as a record. At the end of the year, it finished about 5,000. Today, the Dow is about 45,000, so going up a lot. The price of oil 30 years ago, about $11 a barrel. And the most popular TV show 30 years ago were Seinfeld and Friends.
See, those don't seem that long ago to me. Those shows
one ended and the other one replaced the must-see TV on NBC.
Right.
I mean, they weren't on at the same time.
Not correct. And but the most popular TV show turned out to be the O.J. Simpson trial. Yeah. So last night I couldn't be at your party. I'm sorry. I appreciate your being invited, but
Why couldn't you be there?
Well, I had to go to a baseball game.
You're in last place.
Well, hope springs eternal. But we won last night. But I just have a gift for you from somebody who also celebrated a 30th anniversary. It was 30 years ago that Cal Ripken broke Lou Gehrig's record of 2,130 games. So Cal Ripken asked me to give you this jersey.
Wow.
For each of you.
We each get one. Wow.
There you go.
David,
Cal Ripken jersey.
Here you go, Becky, quick.
Thank you.
And remember, think about this. He played 2,131 games to break the record. Yeah. Ultimately, he went to 2,632 games.
Wow.
So pretty impressive, 30 years.
I remember watching him play, going to see
I also have for you a bobblehead of your favorite baseball team owner.
Oh, wow.
Is that really of you?
Does it nod?
Oh, that's great.
Here, now,
it does everything it's supposed to do.
Here,
there you go.
I'm going to take it out of the box. So, on this show, we did have lava lamps. But we also had some bobbleheads, if I recall. There was
I don't know. Do you have your own bobbleheads?
Was this your idea?
Well, it wasn't my idea, but they gave away 15,000 of them. I didn't. I wasn't my idea.
Can we get that in the camera there?
What do fans want a bobblehead of the
They gave away 15,000 of them, but
we like it, but I don't.
But it's going to be tough to do this because of tariffs. We won't be able to make bobbleheads as readily or as cheaply as we were able to before. So this got in before the tariffs came over.
Then the tariffs are good.
Yeah, what's the cost of a bobblehead? You know?
It's a couple dollars.
The manufacturing cost of a bobblehead made in
Well, I think they're made
in China.
Made in China.
Yeah.
Made in China.
Well, that's the first thing you're doing.
Right. But maybe we'll be making bobbleheads in the United States
back to America, right?
Do we want to be bobblehead makers, sneaker makers?
I don't know.
We want to be AI people here.
But on inflation, clearly the Fed.
Thank you, by the way.
The Fed next week will obviously do something we all expect. I don't think it's going to be a surprise.
You think it's 25 basis points or 50 basis points?
It'd have to be 25 basis points. If the Fed were to go 50 basis points, it would scare the markets that the economy is weaker than the market thinks it is. And I think it would be too much for the market to absorb.
I wanted to talk to you about this in particular because you were in the administration when we saw some runaway inflation back in the
Thank you
late
for
70s.
reminding me.
Well, yeah,
more than 30 years ago.
Well, as somebody who has lived through from an administrative perspective on this and watching how that plays out, lots of people are saying the Fed needs to focus on the jobs part of the mandate at this point because that's where we've seen the weakness. The inflation that had been anticipated has not shown up. How does that sit with you as somebody who has lived with runaway inflation?
When the Fed was set up in 1913, its mission was really inflation and keep the currency in reasonable shape.
It was just one
in 1977, under the Carter administration, Congress passed legislation which said you should also worry about unemployment. And so the Fed has this dual mandate. It's like anything. What part of your body hurts the most? Whatever is injured at the given time. So what part of the economy is the thing we should worry about the most? Whatever is out of line the most. So if unemployment is very high, the Fed's going to focus on that. It's really not that high now. We're roughly about 4.2%. Inflation still is not at the Fed target. The target is 2%. We're still about 80 basis points above that. So I think the Fed is still worried about inflation. On the other hand, the pressure they're getting to lower interest rates is too much for probably in the Fed to withstand at this point. And you've got some new people on the Fed board who are probably going to...
I mean, wouldn't they just look at the data, though, and say the jobs picture is much weaker than we had anticipated?
I don't think this is political. I think that for a while, I've thought that the risk is more on growth than on inflation.
I think right now the concern has been inflation. Remember, we predicted a recession last year at this time. A year ago, people were predicting a recession that would happen this year. It didn't happen. The economy is in reasonably good shape. We're not growing at 5% a year, but we're growing for an economy our size reasonably well.
Half of what we thought
Yes.
were added in jobs, 75,000 a month.
That's correct.
For the past year. Instead, that totally changes everything. In the 4.2, the weird participation rate moves. Some people say it's closer to 5%, David.
Well, remember, the numbers are debated by many people. Some people don't think the numbers are accurate, as you know. And so I think...
Well, they weren't accurate.
The numbers will be adjusted, of course. But I think that in the end, the Fed is more likely to reduce by 25 basis points than to do anything else.
If inflation's the main thing, they should be raising by 25. If it's not a growth concern, they should be raising by, or at least
the Fed is
pat.
One thing we can be certain is the Fed's not going to raise interest rates.
No, I understand,
right?
but if inflation really is the part of the dual mandate that is most important, right? I think they're fighting yesterday's battle from what happened. We went to 40-year highs in inflation. They were sitting on their hands, and now they want to. It's almost like they're fighting yesterday's battle.
Said that he only cared about the inflation side of
that. Should be. Some people think there shouldn't be two mandates.
Right.
There should
The
only be
Fed's
dollar.
target may have been lower than was realistic to get to. The Fed set a 2% target.
Right.
Maybe they should have had a slightly higher target, and they'd be closer to it. Unemployment is now a concern, and I think for that reason, the economy weakening a bit, and inflation is not such a big problem relative to what they thought. I suspect a 25 basis point cut will happen. And the Fed has been very good about telegraphing what it's going to do. The Fed has not surprised people. If they were going to do 50 basis points, we would probably know by now.
All right, tell us what you think about the economy based on what you see from your portfolio companies, and tell us what you think about AI.
My firm just had its annual investor conference. We had people from all over the world here, large numbers of people. And basically, the people's view is, the investors' view is the economy is in reasonable shape, but they're not sure what the impact of tariffs is going to be. The impact of tariffs was widely predicted to be much more serious than it has been to date. And no one knows when the tariff impact will show up, if at all. We just don't know. But right now, investors have money. They're still investing money. Deals are getting done. Exits are occurring. And IPO market has come back. The number of IPOs have occurred. The Klarna deal just happened. Another deal that I'm involved with, StubHub, is probably going to happen in the not too distant future. And so I suspect that the IPO market is loosening up a bit, and that's probably a pretty good thing and a good sign that the economy is not in big trouble.
And it looks like a decent exit market for private equity money that maybe has been looking for a time to do this?
Exits for private equity have slowed down over the last year or two for all the obvious reasons, but now I think it's coming back, and investors are I think, coming back into the market. They're willing to put money into funds. Funds are being raised at fairly large numbers right now.
You know, David, you brought that out. I could almost make the case that Friends was like the end of linear, not the end of linear TV, but it was so, I remember, because we were here and we used to go to the upfronts, remember?
Well, and do you remember when they supersized it?
That's what I was getting to. It was so impossible to come up with. Jeff Zucker said, I can't find anything.
Extend it.
I can't find anything better than Friends. I don't think we ever did, really, did we? The Voice or something?
Well, Seinfeld was pretty good, too.
Seinfeld was prior, replaced by Friends. Friends was on for like 9 or 10 years, and people still watch it. My kids have seen every single Friends episode, and then there was nothing that was going to help, so they supersized it. Do you remember that? Yeah, they supersized
I remember.
Zucker's idea.
To keep it past the top of the hour when the Nielsen boxes.
But Joe, I want to congratulate you. You were the person who was here 30 years ago.
Yes,
right?
I was.
Yes, he was.
Yes, I was.
So you started it all. Did you expect it would go this long?
Yes.
You did?
No.
Did you expect the Carlyle Group to go as long as this has?
I thought a year or two, and who knew what would happen. But we are now, nearly 40 years old. So who would have expected this?
Let me ask you this: Are you planning to be around till the 50th anniversary? Because I'm going to be here on the 40th and the 50th.
If you're here, I'll be here.
Then let's do it together.
All right.
Let's do it together.
We'll celebrate it in our wheelchairs. We'll be rolled in, and and we'll celebrate it then, okay?
Saw Xi and Putin. We're going to have all new organs, baby. AI. We're going to stay like this, like we are right now.
Okay, I hope so.
Okay.
But congratulations on your 30th anniversary, and hope you have another 30 more. Okay?
Thanks for the bobblehead.
Okay.
Thanks
a lot.
And
All right.
Good luck next year. You know where hope does spring eternal? The Reds are only 2 games back in the wild card now. And you know who they got to catch? The Mets. I mean, that's a good shot. That's a good chance.
Why don't you come to an Orioles game at some point?
I love that part of Baltimore.
We're redoing
Yards.
Camden Yards this year.
Great ballpark.
Gorgeous ballpark.
We're redoing it, and next year it'll be redone. Modernized.
You still call them the Birds? I love the Birds.
Yes.
Remember We Are Family versus the Birds?
Yeah, absolutely. All right?
Yeah.
So you're going to come next year, all of you.
David,
thanks a lot.
Thank you so much.
you.
We appreciate it.
Appreciate it. Coming up, another crypto-related company stepping up